Good morning, everybody, and welcome back to another Taco Tuesday right here on the Unbearably Bullish Podcast, the official podcast of The Bull You Can't Bear. I am your host, Donald Johns. Every Tuesday, we serve financial education one bite at a time. Not confusing Wall Street jargon, no complicated financial language, just practical investing concepts explained in a way everyone can understand. So grab your favorite taco, take a seat, because today's special is one of the most popular investment vehicles in the world. We have mutual funds on the menu. Before we get started, let me ask you a question. If I told you that millions of investors own mutual funds, would you know what they actually own? Most people don't. And that's exactly why today's episode matters. By the end of today's show, you'll understand what mutual funds are, how they work, their potential advantages, some important considerations, and how they compare to ETFs or exchange traded funds, which we talked about last week. So let's place our order and get a move on. The shell. Every great taco, it starts with a shell. Every investment starts with understanding what you're buying. A mutual fund is an investment that pools money from many investors into one professionally managed portfolio. So instead of buying just one company, your investment can provide exposure to many securities within a single fund, depending on its investment objective. Think of it like everyone at a restaurant contributing to one large buffet. Everyone shares the meal, but no one has to cook it. It's kind of a nice option. That's essentially what a mutual fund manager does. They research investments, they monitor the portfolio, and they make investment decisions based on the fund's stated objective. Now, let's talk about the meat. Let's get to the meat of today's episode. How does it actually work? Well, imagine 1,000 investors each contribute money. Those investments are pooled together into one portfolio. Professional managers invest those assets according to the fund's investment strategy. Instead of owning the individual holdings directly, you own shares of the mutual fund. Now, one important difference from ETFs, most mutual funds are priced once each business day after the market closes, using net asset value, or better known as NAV. Every investor buying or selling that day generally receives the same end of day price. Let's talk about the toppings. No two tacos are exactly alike, and neither are mutual funds. Here are some of the most common varieties you'll encounter. Stock funds. They're focused primarily on equities. Bond funds, they're designed to invest primarily in fixed income securities. Balanced funds, a mix of stocks and bonds. Index funds, they seek to track a specific market index. Target date funds automatically adjust asset allocation over time. Money market funds generally focus on short-term, high-quality investments and are often used to help preserve capital, though they are not guaranteed. The question isn't which one is best. It's which one is appropriate for your objectives, time horizon, and tolerance for investment risk. Let's add the guacamole. Let's add the good stuff now. The guacamole. Potential benefits include diversification, professional management, convenience, automatic reinvestment options, access to broad market exposure. For many investors, mutual funds can simplify portfolio construction by providing diversified exposure in a single investment vehicle. Now, let's add the hot sauce. Every great taco needs a little spice. I mean, I think you'd agree, right? Here's the hot sauce. What should investors pay attention to? Expense ratios, management fees, sales loads, if applicable, portfolio turnover, tax implications, investment objective, the risk profile, and whether the fund aligns with your long-term financial plan. Remember, every investment has costs and risks. Understanding them is a part of becoming a more informed investor. Now let's move on to the chef special. Ladies and gentlemen, it's time for my chef special. Today's lesson is one of the most important you'll ever hear. Never buy a mutual fund simply because it performed well last year. Many investors chase recent performance, but investing isn't about chasing yesterday's winners. Instead, ask, what does the fund own? How much risk does it take? What are the costs? Does it fit my long-term strategy? Understanding what you own can be just as important as evaluating historical performance. Now let's move on to my bull bite of the week. Here's your bull bite. Diversification can help manage investment risk, but it cannot eliminate the possibility of loss. The objective isn't finding the perfect investment. It's building a diversified portfolio that aligns with your personal financial goals. Let's do my taco challenge. Homework time. This week's taco challenge: visit your brokerage website or mutual fund company's website. Compare 3 different mutual funds. I want you to look at the investment objective, the top holdings, the expense ratio, the risk level, the historical performance, and the management approach. You don't have to invest. This isn't a recommendation. Just learn. Knowledge, as we say, it always builds confidence. Let's do today's taco takeaway. Today's taco takeaway: don't invest because something is popular. That doesn't work. Invest because you understand it. Let's go to the bull's bottom line. Mutual funds have helped millions of investors participate in financial markets through professionally managed, diversified portfolios. They are not inherently better or worse than other investment vehicles. They're simply one option among many. The key is understanding how they work, what they cost, the risk involved, and whether they fit your overall investment objectives. The more informed you are, the better equipped you'll be to evaluate investment opportunities over time. Next week, on next Tuesday, we're putting bonds on the menu. We're going to explain what a bond is, how bonds work, interest rate risk, bond yields, different bond types, and how bonds may fit within a diversified portfolio. Trust me, you don't want to miss that one. It's very educational. In closing, if you enjoyed today's episode, please subscribe, leave a review, share it with someone who wants to better understand investing and become part of the Bull You Can't Bear community. Every listen, every comment, every share, it helps us continue our mission of making financial education more approachable and engaging. I want to thank you for spending part of your Tuesday with me. This is the Bull You Can't Bear. This is the Unbearably Bullish Podcast. Remember, strong markets, stronger mindset leads to unlimited opportunity. Let's follow the herd and remember to always stay unbearably bullish. I love all of you and I appreciate you tuning in. I'm going to do the educational disclaimer. The opinions expressed in this podcast are those of the host and are provided for educational purposes only. Investing involves risk, including the possibility of loss of principal. Mutual funds involve risk and expenses that should be carefully considered before investing. Investors should carefully review a fund's prospectus, including its investment objectives, risks, charges, and expenses before investing. Remember, past performance does not guarantee the future results. This podcast does not provide personalized advice on anything regarding investment, legal, or tax advice. Please consult a qualified professional regarding your individual circumstances. Thank you for tuning in. Have a wonderful Taco Tuesday, and thank you very much. Bye-bye.